Chapter 10, accounting for manufacturing. We're going to look at the difference between managerial and financial. So managerial accounting focuses on internal decision making, whereas financial accounting focuses on external reporting. So some decisions we make with managerial accounting: the selling price of a product, alternatives like what supplier, what materials we should use, what's the cost of manufacturing. So here's a good graphic on financial and managerial accounting. So managerial accounting doesn't have to follow GAAP. It's reported as it's needed, and the focus could be really on anything. Where financial accounting has to follow GAAP. So it has to be reported annually, sometimes quarterly, and it's the company as a whole or specific segments. So a review from the past. So service firms would be like your Delta Airlines, who provide a service of flying on their airplanes. So the service firms earn revenue from services. Merchandising firms sell inventory. So that would be Walmart. They sell you merchandise from their inventory. And a manufacturing firm, they manufacture and sell goods. So General Motors manufactures cars and they sell them to you. And then we have our three inventories. Remember our birdhouse example. So our materials would be wood, work in process would be partially completed birdhouses, and finished goods would be completed birdhouses. So why do we incur costs as a business? Well, we incur costs to provide a benefit to the company somehow. So we provide costs to run our business to make money. We can either get money, recover revenue immediately or in future periods. But we go into business, we incur costs so we can generate revenue and make money. So if you look at Quixote guitars, so a customer places an order for a guitar, they gather the materials, they build the guitar, and then they have a finished guitar for sale. So the costs incurred for buying the materials, paying the guy to cut the wood, and paying the guy to assemble are all incurred so they can get to that finished guitar and sell it. So direct materials, the materials that are an integral part of the finished product. So for Quixote guitars, that would be the wood that we use to build the guitar. That would be our direct materials. Then we also can have materials that are not an integral part of the finished product, indirect materials. So this would be like screws and nails, that you don't necessarily count screws and nails to build a product, but they're indirect materials. So you just include a box of nails that you used, but you don't divide up that box of nails into using 10 nails per guitar. You just call it a box of nails and it's indirect materials. Direct labor is the wages of the employees who convert the materials into finished products. So for the Quixote guitars, this would be the employees who cut the wood and assemble the guitars. So these are the people who build the guitars, and their wages and salaries of those people. Then we also have indirect labor costs. So this would be like the floor manager. We can't designate the floor manager's cost to each individual guitar. So he would be indirect labor. Whereas the people who are assembling each guitar, you could say that John Smith spent 10 hours cutting wood for a guitar. So we charge 10 hours of John Smith's time to that guitar. But you can't divide up time of the manager or the plant foreman to individual products. So that's indirect labor. Factory overhead is costs other than direct materials and direct labor for manufacturing. So for Quixote guitars, for instance, this would be machine depreciation, factory supplies, factory insurance, the electricity, the gas bill, the heating bill. This would be everything other than direct materials and direct labor that's in the manufacturing process. So we can divide these costs out a little bit more. So we have a term called prime costs. Prime costs are direct materials and direct labor. Then we also have a term called conversion cost. Conversion costs are direct labor and factory overhead. So conversion costs are the cost to convert direct materials, which is your labor and your overhead. And then prime costs are direct materials and direct labor. And now we have another set of terms. We have product costs and period costs. So product cost would be your direct material, your direct labor, and your factory overhead. Period costs are selling and administrative expenses. So some examples of period costs would be your advertising expenses, your salesman's commissions, your administrative, your office salaries, your accounting department. Those are period costs. They're not directly related to the product. Where product costs, your direct material, direct labor, and overhead, are directly related to the product. So the big difference here is period costs are selling and administrative, not directly related to the product. Period product costs are materials, labor, and overhead that are related to the product.